Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Thermal Energy International, Inc. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Bill Crossland, President, CEO, and Director of Thermal Energy International, Inc., which trades on the OTCQB venture market under the symbol TMGEF and on the TSXV under the symbol TMG. Welcome, Bill.
Thank you so much, Matt, and welcome everyone. Thank you so much for taking time out of your busy day to hear the Thermal Energy International story. We think we've got a pretty compelling story, and I hope you agree by the end of the presentation. So Thermal Energy International is the profitable path to net zero. And we say that not only because we are profitable, but also because we make our customers more profitable by reducing their fuel use and reducing their carbon emissions. So Thermal Energy International, the profitable path to net zero. That's the standard forward-looking statement disclaimer. So what do? We provide energy efficiency and carbon emission reduction solutions primarily to very large multinational companies, Fortune 500 and other large companies. Our reason for being is we save our customers money by reducing their fuel use and reducing their carbon emissions. In terms of investment highlights, energy efficiency is by far the fastest, cheapest, and easiest way for us to reduce our carbon emissions as a society, and certainly for our customers as well. We provide a whole suite, 10 different unique proprietary solutions that provide our customers a high return on investment and a short, compelling payback. We have significant repeat business from our extensive list of multinational customers, and we are continuing our track record of profitable growth, both organically and through accretive acquisitions. So when we talk a little bit about energy efficiency is the path to net zero. That's not us saying it, that's the International Energy saying it. And the reason they're saying that is because as a society, about 2/3 of the energy used is wasted due to inefficiencies somewhere in the system. If we could flip that around such that we only waste 1/3 and we use 2/3, we would cut our carbon emissions in half right there. So as a result, the International Energy Agency is saying the world needs to triple their investment in energy efficiency if we hope to meet our 2050 net zero goals. Because energy efficiency is the single largest measure to achieving net zero by 2050. The International Energy Agency has said it should represent about 50% of the carbon emission reduction we need to get to net zero. Renewables is much smaller than that. And for that reason, the International Energy Agency calls energy efficiency the world's first fuel. That's what they want people to think of it as. And the reason they coined that phrase, the reason they came up with it is they want, when people are wondering how to reduce their carbon emissions, they want the first thing they think of is energy efficiency. Because again, this is a direct quote from the International Energy Agency. It's the quickest and most cost-effective CO2 mitigation options while lowering your energy bills as well. So where does thermal energy come into that scene? So we focus, as I mentioned, on industrial energy users. So when you think about energy, you think electricity and you think thermal. Thermal is just heat energy. Usually it's a fuel. Often it's natural gas that you burn. On a residential site or a commercial site, about 50% of the energy used is electricity and 50% is thermal. But on an industrial site, about 90% of the energy used is thermal energy. Electricity is only 10%. So they have to address the thermal energy efficiency in order to reduce their carbon emissions. And about 50% of their thermal energy is lost as waste heat on average. And so that's why we're getting a lot of demand for our product. That plus the fact that over the last couple of years, if you've been following energy prices at all, you'll realize much more volatile and higher than they were several years ago. And as well, increasing cost of carbon. You know, the price of carbon and the pricing mechanism for carbon changes in every jurisdiction, but more and more jurisdictions have some sort of price for carbon. Europe is our single largest market, and the price of carbon there is about 300% higher than it was a few years ago. So for our customers, improving thermal energy efficiency is by far the fastest, cheapest, and easiest way for them to reduce their carbon emissions. So How do we do that? I mentioned our proprietary suite of technologies down the right-hand side with 10 different technologies, all complementary technologies, all focused on thermal industrial energy efficiency, all highly engineered and site-specific. So we have to design the piece of equipment in the project for the application and for the site. But using these technologies, they can recover about 80% of the energy loss. So we can take a site from going at 50% efficient up to 90% efficient, all with a compelling return on investment and payback. We talked a little bit about repeat business. So, we do focus on very large multinational customers, and that's strategically for a reason. Obviously, it tends to be the very large multinationals that have very large sites that are using a lot of energy. So, if we have a nice big site, we can save them a lot of energy and do a nice big project for it. That's one reason. The second reason we focus on large companies is they have hundreds or thousands of sites around the world. So we want to sell more product to more sites around the world. Over the last 4 years, about 60% of our orders have come from our top 10 customers. I would say we've partially penetrated, so only sold maybe a little bit, small project, sometimes a larger project, but partially penetrated about 100 of these sites. But you might initially think, well, you're getting close to the end with those 10 customers, but no, those 10 customers have about 1,000 sites worldwide. So we would estimate we're probably less than 5% penetrated, even with our top 10 customers. Proven growth strategy. We have proven ourselves to grow both at about 30% compounded annually and grow profitably, and we want to continue that. And that strategy has 3 pillars. Number one, we want to leverage our existing high quality customer base. That is, we want to sell more projects, more equipment to more sites. We want to increase our portfolio of complementary products so that we can sell more projects and more solutions to more sites. And we want to grow our team and our global presence. And we have been doing that, and we want to continue doing that both organically and through accretive acquisitions. In terms of acquisition criteria, generally we're looking for something that's accretive to the bottom line. We're not looking for early stage pre-revenue technologies. We're looking at proven technologies, company with commercialized products and potential revenues of sort of $2 to $20 million. Most of the companies we've looked at have been about our size or smaller. And so we're looking for companies that have either complementary products or complementary market positioning. We want to be able to sell their product through our channels and sell our product through their channels. I talked about stable, profitable growth. So this is you can see on an LTM basis, we're now at $26 million. Our year end is May, so that's a 64% increase from 18 months ago from our fiscal 2022. Our year end is May, so 64% higher. Our Q2 revenue, which we just reported a couple of weeks ago, is up 71%. The LTM revenue of $26.1 million is the highest LTM revenue we've had in the company's history. We talk about profitability. Again, EBITDA is positive. You can see we had a little bit of an EBITDA loss back at the tail end of the pandemic, but been growing very strongly ever since. And for the LTM basis, $3.2 million EBITDA, again, the highest in the company's history. And net income, at $2.1 million net income on an LTM basis. Again, the highest in the company's history. So we're growing, and we're growing very effectively, and we're growing profitably organically. And in terms of looking forward, our order intake year to date, so far that's up to January 23rd. So these was the Q2 reporting dates in each of the past 3 years. You can see our order intake is up 226% from 2 years ago, and our order backlog at $23.6 million is up 215% from 2 years ago. But looking even further out, we sell our projects, we sell our solutions primarily 2 ways, either as a total turnkey project where we come to the customer, we design the project, we pitch it to them, we install it, we manufacture the equipment, we install it, we get it up and running and commission it for them. That's a total turnkey package. Or those tend to be sort of $1 to $3 to $4 million order sizes. or we can just sell them the equipment. In that case, it's usually much smaller order size, and it's usually a much simpler project, smaller project. But the big turnkey projects, which historically has been the majority of our business, they're developed first with a project development agreement with the customer. So usually the way we're pitching these to customers, we know the type of sites and the type of industries that can use our services. So we'll go to them and we'll say, look, we think we can save you some money. Let us do a little bit of work, give us some data, and we'll come back to you with a preliminary proposal. So we do that, we gather some data, we come back to them, a few weeks or a month later, having done the initial analysis, and say, look, based on our initial analysis, we think we can save you $1 million and it'll cost you $3 million to do it. Is that, a project that would interest you? They'll say, yeah, that return looks great. Can you do that? And we'll say, well, that's just the preliminary engineering. But I'll tell you what, you sign a project development agreement with us, and we'll go and fully develop that project to give you firm prices with guaranteed savings. And if we come back to you with a project that meets today's payback, then you have to agree to do the project with us, or you have to pay us X. That's a project development agreement. I'm just going to refresh my browser very quickly because it looks like I'm delaying and my voice is being delayed a fair bit. Okay, we're back. Hopefully this will be a bit better. So those project development agreements are an important indicator of the momentum in our business. Historically, it can always change, but historically, about 50 to 70% of our project development agreements have resulted in a full project, an average of 12 months after signing the project development agreement. So signing project development agreements and having live projects under development, of which we now have 26, up 86% over the last 2 years, is a good leading indicator of future business. And then this is the stock chart over the last little while. You can see we've had volume. The pandemic was difficult for us, no question about that, because as you can imagine, with these large turnkey projects, there's a lot of site visits, there's a lot of travel. So during the pandemic, all those projects were shut down. So the good news is throughout the pandemic, our custom equipment did continue to grow. And now our project development agreements and our turnkey projects are coming back stronger than ever. So, we turned profitable again about 4 quarters ago. So it was the third quarter. We've been profitable every quarter since. So back in September is when we announced our year-end results to show that we are profitable for the year. And we also that's when really we started to ramp up in terms of our order backlog and our order intake. And so the market took notice that we are back stronger than ever. And we've had some great traction in the stock, for the last few months. Just sum up again. Energy efficiency, fastest, cheapest, easiest way to reduce carbon emissions. We provide unique proprietary solutions to our customers with a high return on investment and compelling payback. We have strong sole source relationships with an extensive list of large multinational customers that we're doing more and more business with. And we are continuing our solid track record of profitable growth organically and hopefully with accretive acquisitions as well, as we have done in the past. I think that's about the end of it. We would now be happy to answer your questions. I'm going to, Trevor Heisler with MBC Capital Markets is going to help facilitate your questions, and hopefully you've got lots of questions.
Thank you, Bill. We do indeed have several questions here. Your first question is, can you name who your customers are?
Yeah. Well, I can, but I'm not going to. We protect, that's one of probably our most important proprietary intellectual properties, our customers. We spend a lot of time and effort developing those relationships, so that we can work with them to develop projects and implement projects on a sole source basis. The last thing we want is to announce a project, and all kinds of wannabe companies that think they might be able to do something similar come to our customer and say, we can do that, but we can do it much cheaper. So we don't publicly announce our customer names, but you would know all their names. Certainly the top 10, you would know all their names. They're well-known consumer brands, food and beverage, pharmaceutical. It's names everybody knows. As I said, it's primarily Fortune 500 and large multinational companies.
Great. Your next question. With the increase in PDAs, is it fair to expect a steadier flow of news releases regarding contract wins going forward?
Yeah, I know investors always want, one news release every month or every 2 weeks. And the real world, unfortunately, doesn't work like that. We release them when we receive them, and we have very little control of when we're going to receive them. Having said that, do I expect that we will get more turnkey projects? Yes, I do. As I said, historically, about 50 to 75% of our project development agreements have resulted in a project, an average of 12 months after signing the project development agreements. In some cases, it's been as long as 3 years. In some cases, it's been short as 3 or 4 months. The average is 12 months. We now have 26 projects in development with customers, far higher than we've ever had before. Pre-pandemic, we were probably at 3 or 4 live projects at any given time. So we're pretty excited about the future, but certainly can't guarantee the timing of those orders.
Your
Next
next
question,
question.
Trevor. Yep.
What industries do you sell to, and which make up the most of your revenues?
Yeah, so we sell to, when you think about it, we're doing thermal energy efficiency. So anybody that's using natural gas or any other fuel. I mean, I mentioned natural gas because most of our projects are natural gas, but we've also done oil, we've done biomass, so we've done renewable natural gas. So any company that's using heat, which is almost every industry, could use our services. So, we have done projects for the tire industry, chemical, textiles, pharmaceutical, food and beverage, mining. But our single largest is food and beverage, and that's a pretty broad sector, as you can imagine. But you can also think that food and beverage has a lot of heat for cooking, for sterilizing, for cleaning, and they also need and use a lot of heat. Have a lot of, when we go to a site, we need to find a heat source and a heat sink. So it's not just enough that they're wasting all the heat. They have to have a use for that waste heat. And food and beverage has lots of great heat sources and heat sinks. So food and beverage is by far our largest, probably over 50% of our revenue. Pharmaceutical is probably the next largest after that, and then it drops down quite a bit after that. But like I said, there's virtually no industry that we haven't done a little bit of business with and can do more.
Yeah. In your most recent earnings news release, Thermal Energy mentioned that in the future, due to a normalization in the product mix, margins would return to historical levels. Can you please explain roughly what are those historical gross margins? Are they in the 40% range?
Yeah, I think historically, if you looked back again, pre-pandemic, is the last time we were sort of normal, I suppose. And we're now in a new normal. And back then it was around 40. It was the low 40s. And, we would expect the custom equipment, as you can imagine. The proprietary part of our technology is the equipment, right? So the custom equipment has a higher margin than a whole turnkey project, because a turnkey project contains some non-proprietary parts as well, piping and installation and foundation work, that sort of thing. So the custom equipment might have a 50 to 55% margin on average. The turnkey projects, maybe 30 to 35% margin on average. And usually when that averages out, we're sort of in the low 40s. So with a normal product mix that I would expect, that's sort of where it would normally be. It's interesting to note, we have the product margins, individual product margins haven't really changed. They did dip a little bit during the inflationary period. They're sort of back up to where they were historically. So, right now, any changes in margin that you're seeing is really as a result of product mix. And that can vary quite a bit quarter by quarter. Right, these big projects, when they're done on a percent complete basis. So if we happen to when you ship the equipment, you can actually book some of that revenue. So if you ship the equipment just before the quarter end, it goes in that quarter. If it's 2 days or a day later, it's in the next quarter. So the quarters, there can be variance in the individual quarters. Because of product mix and the timing of big projects. And that's why I always like to look at it over a little bit longer term than individual quarter, more like a LTM or last 4 quarter basis. Next question.
Yes. Is there any seasonality in your business? And if so, which quarters are your busiest?
Yeah, I would say we're busy every quarter. The team is always very busy. But in terms of order intake as well as in terms of revenue, it tends to be the first quarter tends to be the least busy, and that's the summer, so that makes sense. The second quarter is usually pretty good. That's the fall. The third quarter is sometimes not quite as busy again, or not quite as busy in terms of booking revenue, because that's the Christmas and the New Year's, and a lot of people are off. And then the fourth quarter is usually quite busy because it's our fourth quarter, and the sales team is trying to get in, all the orders they can to meet their target, and the rest of the team is trying to revenue as much as we can so we can get into that year. So I would say the second and fourth quarters are a little bit busier than the first and the third.
Great. Is the 30% anticipated growth going forward likely to increase given the increased penetration in various markets as a whole?
Yeah, I don't know that we've ever said we're anticipating 30% growth. We certainly want to continue growing. Historically, from again pre-pandemic, we grew 50% compounded annually for 5 years, right up to the point of the pandemic. And we would like to get back to that. So we want to just keep growing the business as best we can. But I certainly don't want to give any forecast on what that growth is going to be. I think, people can sort of look at the numbers and sort of do their own analysis. In terms of order intake and PDAs, we are right now feeling pretty excited about the future.
Can you describe the proposal pipeline that you may have out there sitting with clients, considering the number of PDAs, the value, and how they figure into the bid proposal pipeline?
So yeah, I mean, we do track everything very extensively. We have a CRM system, and we have criteria on what every project goes into the CRM system with a probability. So I often, as a management team, we track the probability weighted pipeline as opposed to the total pipeline. And I certainly don't, that is very speculative, that pipeline, because some of that stuff could come in and some of it couldn't. I think, as we talked about, the PDAs are a good indicator. Historically, if you look, that turnkey projects tend to be sort of $1 to $4 million. So say an average of $2 million. And that we've said that we've got 26 projects in development. When those are going to come in, we don't know. But having said that, we don't do a PDA for the sake of a PDA. We have to have a value proposition. We have to believe that the customer is going to do a project and that there is a good project there before we enter in a PDA. We're not in the business of doing engineering, even though the customer is paying us. We only want to do that if we think it's going to be result in a profitable project for us and for the customer. And that's why we have, a pretty good hit ratio on those project development agreements.
Great. Have you done any projects in Austria or Germany?
Austria, I can't think of Austria, but lots in Germany. We have, 3 people and 3 salespeople in Germany, and our European sales director is German as well. So yeah, Germany is a very good market for us, and will continue to be a good market for us. Europe is a strategic market for growth. For us, that's where we are investing. Historically, I would tell you that Europe and North America we're about 50-50 in terms of revenue. But I think Europe, for a lot of obvious reasons, looks even more positive now, primarily because energy prices are 3 to 4 times higher. They have carbon prices as well that are higher. So we're really looking for growth in Europe, and we have been adding staff in Europe. So like I said, we've got in terms of in Europe, we've got 1 person in Poland, 1 in Italy. We just hired 2 people in France. We've got 3 people in England, and we've got 3 people in Germany.
Great. How capital intensive is the business? Is there a lot of upfront investment on your part when you start a new project?
Yeah, it's not capital intensive at all. We're a virtual manufacturer, so 80 to 90% of what we sell, we get someone else to manufacture it. So we have very little invested in plant and equipment. It's really just, like I said, less than sort of 10 to 20% of our revenue. As I mentioned, the custom equipment has a pretty good margin, so there's not a lot of working capital tied up there. And the big turnkey projects are always designed on a cash flow positive basis. So we're not going to invest all the upfront time and effort engineering unless we get a deposit up front. So we get deposits up front, and they're usually cash flow positive right through the length of the project. So, when we are growing and when we're profitable, we usually have some pretty good cash flow.
Would you say that skilled staff is the biggest hurdle for increasing growth?
I would say that skilled staff is the biggest hurdle for increasing growth. That's a great question. And, and it varies. Historically, we would say it's, when you think about our business, probably 45% of our company is salespeople, 45% is engineering staff, and 10% admin, roughly. Um, Historically, a lot of those salespeople are also engineers. It's a technical sale, it's a technical product, so you need a lot of technical staff. Historically, it's always been a challenge to find good salespeople, and we always sort of had a 1-to-1 ratio. But more and more now, with the orders that are coming in, we're focused more on growing the engineering resources. We probably don't need 1-to-1 ratio anymore. And we need more engineering. But yes, bottom line is finding good technical staff is always a challenge.
Great. The next question, I think, might be from a longer-term shareholder. I haven't heard the company use this term for a while. Are there any mega project proposals out there today?
There's always mega project proposals out there, and I can't remember a time where there wasn't a mega project. The challenge, however, is historically, at least, mega projects tended to be in pulp and paper. And historically, if you go back many years, and this shareholder maybe remember that, the company was largely focused on pulp and paper. A lot of our revenue is pulp and paper. Very little of our revenue is pulp and paper now. Pulp and paper projects tend to be very large because they're very energy intensive. But pulp and paper also is an industry that doesn't always have a lot of money, unlike food and beverage and pharmaceutical. So there's always a bunch of proposals out there. We're always working on working on some big projects, but you never really know if the pulp and paper companies are gonna pull the pin on it. So yes, we have some out there. Hopefully some will come in, but certainly no guarantees whatsoever.
Great. With regards to acquisitions, what's the size of the potential acquisitions that you might be considering? And is there anything that you can share on the valuation metrics for those?
Yeah, I mean, the valuation, every company is a little bit different, obviously. As a rule of thumb, we sort of think of one-time revenue. Most of the companies that we've looked at in the past, we've got a list of companies that we've met with that we think would be interesting. They're all private for the most part. And so when you're buying a private company, you got to be at the right place at the right time. They have to be ready to sell, and often they aren't. But about 1 times revenue is generally what we consider a reasonable price for a proven company.
And what would you say is the difference between thermal energy today versus 5 or 10 years ago?
Much more 5 or 10 years ago. Much more profitable, much larger, much more professional. We have developed the team and the systems to execute this business effectively and efficiently, and we're not so reliant on mega projects. Again, many years ago, 10 or more, it was we'd have a great year because you'd have a $7 million project, and then you'd have nothing for a while. Well, we've evolved much further past that. We have a whole host of customers of which we have done large turnkey projects for in many different industries. And we are not just a pulp and paper company anymore. We're primarily food and beverage. Food and beverage is well over 50% of our revenue historically over the last 5 years.
Okay. Given the time, I believe this is our last question. Do you have any patents on your products, and how many years of patent protection might you have remaining?
Yeah, so most of these technologies were developed, almost all of the technologies that we have were developed in the 90s, so the patent protection has long worn off. Having said that, on the GEM business, we do tweak it a little bit and apply for more patents. But to be quite frank, we don't, having patent protection might be an advertising feature, but we don't place a lot of emphasis on it. Everything we do is proprietary. So what we really bring to the customer is the ability to wrap it all up in a total turnkey project, best-in-class product and service. And so that's really why our customers know us and trust us and do project after project with us.
All right, Bill, I believe we're just almost at the 30-minute mark.
Yes. Thank you so much, everyone, for your time and attention. Thanks for the great questions. Don't hesitate to reach out. You can see our website at the bottom, thermalenergy.com. That's probably the easiest way to get in touch with us or to get more information. And so we certainly look forward to hearing from you.